Hey, ngikubye ssebo. Yo,
kyabadde ogamba
nti ngikubye ongambye ntekewo uptrend ya iyo.
kanetwa akadde kavuddeko.
Mm.
Yeah. So in case the market kubanga akuba, you see this last higher high,
This.
yeah, gifuuse munge nti, yeah, make it a bit smaller, very
This.
small. No, like what you want, the higher high, make it a bit smaller, like price is going to come back. Yeah, gikirizeemuko wansi katono.
Wano.
Then see price here. Kati olaba wano market badde yambuse where it's going, then nebanga shifting ekomawo wansi. To the at the lower, to the second higher high.
From this to this.
Yeah.
So
market neve
up from up here and it comes here.
Yeah, to that zone.
And
we get a confirmation in that area. How would you approach that?
Okay. So first let me re-explain before going to that. So when it comes to order flow, it is all what you need to follow when you are about to decide which area of liquidity you are going to take. Before even confirming an area of liquidity, you have to first look at the order flow. You have to be knowing, is my order flow bullish or it is bearish? So for example, on this scenario, we are going to be looking at the bullish order flow, whereby a price has been creating higher highs and higher lows. It is respecting highs, sorry, it is violating highs and respecting these lows here. Now, for example, as you have said, we are having this as our area of liquidity. So where people make mistake first, I've said they don't follow order flow. So for example, we are having this area of liquidity, and this area of liquidity is a bullish area of liquidity. We have to first look behind how is our order flow arranged. So looking at this, we are seeing that also the order flow is bullish, meaning this bullish order flow, it is accompanied by the bullish order flow as well, this bullish area of liquidity. So there is such scenarios, they happen a lot, whereby we are having this bullish area of liquidity and you find price printing something like this. So from here, price will be printing an area of liquidity, but this area of liquidity, you can even confirm it. You can look for buffers, overlaps. It is having a type also, so you are saying it is a high probability area of liquidity. But because you are not following the order flow, you will end up losing on this. Why? Because already we are having this bullish area of liquidity, and it is on the correct order flow, or it is matching with our order flow. So you are having this area of liquidity here. You will find you will maybe wait for blah blah what how can I call it? You can confirm it, look for your liquidity engineering or flip, you place your entries here. For example, something like this. You say, okay, now I'm going to sell, price from here up to maybe or this level, what, anything you feel like. Then price comes, reaches this level here. Remember, you are waiting for sales above here. Then it shifts, offers a formation, price comes back in that formation, it comes to your entry, gives a little reaction, and then it continues to its original trend or its original direction. Now people will start saying, I've took this loss, now why? I've confirmed this area of liquidity, did what, but the problem is they didn't follow the order flow. Yes, this was a correct area of liquidity, only it would have been considered if the order flow was like this. You understand? So then it printed this area of liquidity here. the order flow is bearish and then this area of liquidity is bearish, so it can be respected. But still, that doesn't mean that you're having the holy grail. If you're having your areas of liquidity when they are corresponding with your order flow, it has to play out as a must. There are things you cannot tell price to do. It can be price, it can be high time for price to shift from here. You get your confirmation, what and what, then price did does something like this. It shifts, you understand? So after shifting, remember yeah, you're having this maybe situation one, shift formation. Yeah, am I confusing you, or we are at par?
Yeah, yeah. Let's go.
Yeah, I'm saying, so from here, this maybe this is your situation one. You have your shift formation, what and what. Then price, instead of giving you
Yes.
an entry, it gives you an entry. Instead of triggering it, it just goes through it and it shifts. You understand? So you cannot tell price that don't shift. It will shift whenever it wants to shift from. So those losses will be there. You understand? So that is why for me the most times I lose because price wanted to shift, or price can sweep me and then it continues to my desired direction. But I never fall for this. If I'm not having my order flow, I don't go for that. So let us go to the question you asked. Is there any question before we proceed to the other question you first asked?
Now let us now go now to that question.
Okay.
Shall
So
we clear, man?
it is clear, eh? We can proceed. Eh?
Yeah, yeah, yeah. Let's proceed.
Okay, hold on a bit. Okay. So the thing is, your question was, what if I'm having this area of liquidity here? Uh, then price violates it and it comes to this area of liquidity down here. What do
Then
I
it
do?
gives you a confirmation.
That was your question, right?
Yeah, yes.
Now, there are two cases here. For the first case, remember this is our area of liquidity, so it can be monthly, daily, what and what, any. So, first and foremost, me, I will mark this as my BOS. Then I will mark this level as my transition or a shift. Then what do I do to this area of liquidity? So I'm having two things in mind. One, this can be liquidation. Hmm?
Yeah.
You can check, you first check on the area of liquidity here which was violated aggressively. Maybe you can find when there was liquidity consumed. So if liquidity in this area of liquidity is consumed, price will not respect it if it is consumed. You see, there is a where you find such scenarios, or when you find price doing such things like this, it creates areas of liquidity, it consumes them, it creates another, it consumes it, it creates another, it consumes it. You understand? So if you find such areas of liquidity or such scenarios in this area of liquidity here, it will not be respected, because the only reason as to why price comes back here, remember the market is a slave to liquidity, so the only reason as to why it is coming to mitigate this, it is to liquidate or to grab that liquidity, then it continues above. You understand? So
So
mhm.
now, in case you get like a confirmation in an area that has consumed liquidity, would you execute that trade?
In Yeah, I will. Why? Because I've got a confirmation. So that is the main reason as why we confirm. Once you get a confirmation and you lose a trade, it is fair. Move. It is okay. You understand? As long as it is confirmed. But if I find it consumed, I can, yeah, after a confirmation I can, because my confirmations are a shift, you understand? So if price gives me a shift inside that area of liquidity, it is showing me that maybe the buyers or the sellers, uh, the seller's power has reduced and the buyer's power has increased. So that increase in buyer's power can can alert me that maybe price is potentially going to move above. So with confirmation of a shift, yeah, I can go. So I can just add something little. It is the FTA, as I told you about it last time we met, right? And you know basics about it, you understand? So if this is daily, we wait for the 1 hour shift, then we look for the 4 hour shift as well, you understand, to be more confirmed, because this area is having its own problems, which is liquidity consumption, you understand? So to go back to our topic here, or to your question, I've said I will be having two things in mind. One, liquidation. Price may be just liquidating this low here, and then it is going to continue to give us a shift in here with the formation. It reacts on a flip or liquidity engineering, then it continues and break this high here, right? So there is that one scenario. Then the second one, it can be a shift has happened purely, and then price is going to react on this area of liquidity, which is an inside the formation, to continue with the drop. You understand? So what are you going to do? One, you have to look for entries in this area, because it is an area of liquidity no matter this shift here. So we can look for counter trend, you understand? We can use that second agglomeration, which is the normal area of liquidity, and look for our counter trends, you understand? After looking for our counter trends, we buy to this level here, then we do what? We sell to continue with the newly formed trend, you understand, in order for us to break this structure here. So those are the only two scenarios, but remember, that is the only thing I told you, that if you are trading and you really need to make money, don't focus on, what do we call it, risk approaches. Leave alone risk approaches, you understand, because there is no need for them. Why do you rush to go on a risk trade when you can wait for a confirmed one? So it's better you wait for a confirmed one, then you execute on that. It is fair. I understand. So that is it. Is there any other question before we proceed? About, we're having something like 10 more minutes, I think.
Still back to the other question. I haven't yet got a proper answer. So for you, you have to take, let's say you're going to go with a weekly order flow. Should I call it weekly order flow?
Yeah, no problem.
Yeah. So for you to consider the weekly, do you look at monthly and see that its structure isn't making sense to you?
Thank you so much.
Going with the...
Okay, so now I'm having your question in play very well. Before me doing anything, even looking at order flow, on each and every pair I analyze, monthly is my first time frame to look at. I only drop when I'm seeing monthly showing no clues to me, you understand? So that is when I drop to another time frame. So far here, this was, maybe it is called, this is not cycle 5, I think, but yes, it is. Okay, are you seeing your question here? Because this is a break of structure to me. I don't know if to you it is as well.
Yeah, it is.
Yeah, so meaning if this caused a break of structure below there, if it is invalidated, we are having a shift probably, or a transition, right? So our transition is on this week here. So we had this transition. Okay, I can cut price in order for us to see something clear. Okay, before doing all that, I've said we go to the monthly. Are you seeing the monthly order flow?
Yeah.
Is it bullish or bearish?
Bullish.
Okay, so after knowing that, I'm having that monthly order flow, and it is a bullish monthly order flow. So for example, you have been here. This is the last answer I'm going to answer you, so we shall proceed next time, I think. So I want it to be more clear. You understand? So now you may say, how about this? I'm seeing it very well, politely, and okay, wait. Are you seeing this? This pair is having a lot of very good examples. I wish we had time. So, are you seeing it? Well, after, let me first delete this. So
very
this is
complicated.
now it is not. It is having all the answers for your questions. So if you get your free time, go and back test it on the monthly time frame. You will get all the answers you need. This is the best mentor I'm recommending you to. It is the market. Understand? So are you seeing this? We are having this area of liquidity here, but before that we are having this area of liquidity here. And remember, this area of liquidity is there and our order flow is bullish. What are we looking for? Daily time frame, right? Daily time frame, we need to see our shift happening here. So for those people who use maybe the risk approach, they are going to refine something like okay, maybe if they are refining to, it can be here, I think, their entry, right? Because they don't need to wait for a shift, so they are buying from here. For you, you are waiting to see a shift happening here. Hello. Hello, Wanji. Ndabayo nkyali bizeemu kati ngenda kukukubira. Okay, so this is our recent break of structure to the downside, and this is our high here. So probably if we are to buy, we have to wait for price to close above here, meaning we have a shift here on the daily time frame and the formation. Maybe if it is created, then we buy from there. Those people using that risk approach, they are going to just buy from here. So we wait and see what price is trying to do. So this is not a break of structure here. It is not, because it is just weeks below. Okay. Are you trying to see? No, it is not. So these people with their risk approach, they are being taken out. Understand? Because they are just buying arrogantly, because they are knowing that price has to turn from that point. So I don't recommend that. But confirming is a lot more better, I think. So from there you can clearly see that price broke through this. So why? If we can clearly see here, try to look and see what I tried to tell you recently. Are you seeing this? It was an area of liquidity, right? Then price consumed it, you understand? And then it created another and it didn't consume it. So this liquidity consumption here, maybe it was one of the reasons as to why price just dropped. But that is not crucial, or it is not key. It can be like that and price can react on this here, newly formed, you understand? From there, and it shifts and then price continues to go above. So that is not appropriate. But all we have to do is to wait for a shift. If we don't see it, we don't trade, we leave it. So now, after we go back to the monthly, now this is being violated and it has been closed below. Now there are two things, as I explained earlier. I told you it can probably be a shift, or it can be just a sweep of liquidity. Yeah. So price can be sweeping liquidity to mitigate the next area of liquidity, or it can be something like What? Okay, let us see, let us see here. Maybe months, we make it 2, maybe 3 months. Interval already exists. Okay, let me look at it. Yeah, so we had even, are you seeing here, it was a confirmed one because you can clearly see that overlap, right? So it had some good qualities. It is having an overlap. If we can go to 2 months as well, uh, it is not there. So let me add it. You don't want premium trading views. That is why you are facing challenges. 2 months. That's your second.
Yes, yes,
I think that's a category.
You don't want to buy premium.
Yeah,
That's
so
good.
it is having overlaps. You understand? Eno ina overlap ku 2 months, eno naye ina. Though eno yo ne ku 3 months yaina, ate eno yali disappearing. So this one, which was invalidated, it had good potentials to hold price. Okitegeera naye price yakola ki, yagiyitamu ne shiftinga. Kati nga bwe nagambye wano, either we are going to look for entries to buy price back up if it only, okay, so here you can tell me, you can ask me, tugenda buyinga naye tugenda komawa, so it didn't create us a formation. That is indication one, that price is more likely to go above this level. Even here lwakubanza gyali nnyo considering a body, naye it is having a lot of potential to go above here. Okitegeera, because it didn't offer us a formation. Formations ze tutekingiramu trade. If it didn't offer formations, it means it is more likely to be taken out, or it can react on the QM. Look how low the QM is. That means this cannot, if it does, it is okay. It can react on this, and then it gives us an outside formation. Then we can take our trades from there. But if this QM was above here, at least we would have used that indominatable to see what price is willing to deliver. But now we will go back to the daily, understand, and try to scale in some things. But here I want to show you something here before I call it off, because we are not going to finish this. You may ask me why. I don't know the answer. So are you seeing this? This is the breakout structure we are having currently, and if you are to look, if we are to have a shift, it will happen above here or here, any. But I think this, because this body is a bit higher, right, and this body here is a bit lower, though the wick is higher, so I prefer the bodies. So if the shift is to happen, will happen above here, and it will be outside our area of liquidity, so that is not valid for me as well, understand? So what do I do in such scenarios? Remember, which time frame is this? Daily. So are you looking at the daily order flow? Are you seeing how I come to, remember you asked why do I choose a certain time frame, blah blah what. Now I'm on daily, you understand? So looking at the daily order flow, I'm from monthly, now I'm on daily. Looking at the daily order flow, the daily order flow is bearish. And what do we have here? It is a daily
area of liquidity.
Yeah, so that means we can counter trend. Am I correct?
Yeah.
So we can go to 1 hour and look for that shift. Why are we going there? Now you can tell me, I thought we had to wait because daily is the coordinated time frame, blah blah. No, it is not. Yes, daily it is the coordinated time frame, but I've told you where we are expecting our shift is a bit higher. It is outside our range. That means for me, I want to buy. After buying, I want to sell. You understand? Yeah, so that is what I'm waiting for. I'm still focusing on the daily. So once I see daily shifting, I know that now the monthly is calling. When the monthly is calling, I have to pick up. You understand? That is it. So we go to the 1 hours time frame. We want to scale in some cycle 2 trades. This thing is rushing. Okay. So still, are you seeing the order flow? The order flow is bearish. So we have to wait to see is the order flow going to transit from bearish to bullish. So from here it did. This is our shift. Do you agree?
Yeah, it is.
Because this is our recent breakout structure. So we are having two formations here. We are having this and we are having this.
They both type 1. The bottom one is a type 1.
They are all types. They are all types.
The second one, let me check it out. The second one.
The second one is type 5. Type 5 and type 1. So 4 hour can answer our questions here. So if we go to 4 hour, it hasn't shifted and it is not having a type. So that is never a problem. If FTA hasn't shifted, we can still continue with our situation 1 time frame. You understand? So let us first go back to the daily and see. Daily is still showing the same thing. I went back to see whether I did something like this, maybe, because it can do something like this and it breaks more structure. Then if this shifts here, it is inside our area of liquidity in the monthly time frame, right? Yeah. So here nothing much, so we just go back. So either you can take trades from here or here, because we tried to confirm but nothing much, or we can try to go to 2 hours maybe and see. Both they are having overlaps, right? Now we can go to 3 hours. One is still having an overlap, so meaning this is having the highest potential, this upper one. You understand? But if it can be having the highest potential and still be invalidated. So if it is invalidated, we consider the lower one. If they are all invalidated, we are out of that trade. We wait and focus on that on the next opportunity. Yeah. I don't know whether that was a flip where price reacted. Sisuubira nti okay, lwakuba twadde mu monthly ekisoboka nedda naye tetusobola. January 2023 mwaka guwedde. So you see, it did a lot, so it played around. So you see why I don't like flips. So maybe here was a flip, it went, it was activated, price continues to move up, it comes back down, sweeps that entry and continues. So it's better I use liquidity engineering. The flips are also powerful, but according to my own experience, I don't prefer them. Are you seeing? Now you have seen how we have confirmed this, that it is to hold, right? So you tell people they need premium trading views, they don't want. Now from here you won't know that this is going to hold, or this is having that much potential, or this. But still you can figure out for some ways. You can be that master planner. Let us try to go inside here and see what held price and pushed it above before. Man, time is moving like shit. Okay, so minute 15, I think. Okay, nothing much. It is only this simple thing here, which is a sub area of liquidity. So from here I don't refine even, I just enter on this. Once I find it in my formation, I don't refine. I just enter on this.
When you get an inside formation and it has a type, you don't refine it.
No, when I have an inside formation and it is having an inside formation in it, it is called the sub area of liquidity. I don't refine as long as the risk is worthy or it is enough. If I measure when it is much, okay, this is much, I can refine. These are 20, I can't. If there were 15, 10, I could just enter. But from here now I can refine. You can go maybe to minute 3. But you know, if you find them, they tend to hold without refinement. Once you refine, okay, so you can refine it like this. This is better, I think, right? Or you can use this liquidity engineering resting below here. So let us see whether the refinement held or the liquidity engineering. So let us first measure. Gwe the boy so there are 7 here, 7 pips. Then from here there are 12. So they are all good. You can enter on any you feel like. So let us go back to our 1 hour time frame and see what went wrong. Okay, so this one for 7 pips wasn't activated. The one for 12 pips, it was activated. Oba gano gali mawulire. Wednesday ateeka okuba yali gundi.
Pips kasita zisukka mu 50 ng'omanya go mawulire.
Gano mawulire kyemmanyi nange. Lwali lwakusatu ayinza oba yali CPI oba. Zizo ziri bibiri. Probably. So this, if this is your entry, you would have been in. If the lower one was, would have missed. So something like 15 pips. Yeah, would have been enough. 14.8, almost 15. And remember, we are targeting this area of liquidity. Don't go inside it, just target it. So it is something like 1 to 17. Even if it is 1 to 15, you are out. Then you are looking for sales now inside this area of liquidity here. So you can use cycle 1, the confirmed flow of liquidity, whereby you wait price to reach on this formation here, and then you see what to do. If it doesn't shift on 1 hour, don't mind, just leave it to be. So it went up, it came back for correction. Maybe here would have been another entry. Hey, are you seeing this? Hey, are you seeing this, man? Are you seeing this?
First continue. Let's see how it worked out.
Okay, yeah, it is better, I think. So you see, this is the nature of backtesting now. At first, it did something like this. It went on our entry, our first entry. It triggered it, and news made it more aggressive, and it continued above. Then it came back down here to this last area of liquidity. It consumed it, or it reacted on it, and it is now moving. So let us hurry it up and see, did it hit ACL or continued? So it continued as well. Understand? So for a sharp person, would have bagged all these two. Okay, so in case you missed this first one, right? And then price reaches there, but it has not shifted, right? So you come back on this, maybe, or you had 2 entries, maybe. Yeah, they can all be there. You can be having this first one, and then you're having the last one as well. So here, I told you for this I don't refine. But this is not a sub. Okay, it is. Yes, it is. You can just use this. Or liquidity engineering is also here. eddako dakika 5 ebulayo 3 nvaako wawula gwe kisiraani. So it is here, liquidating engineering, and
Tap the zone.
now we shall look at it. Maybe I just want to measure. Five pips, even if you make it 7, it is okay. So you go back to your 1 hour. Yeah, you put your entry, you wait. So you can make it something like 8. Since it was 5, right? You can add those 3 pips, and then yeah, now this one would have been very good. 1 to 36. So it stopped and it moved to TP. But hopefully you have seen how that bias was. So you were asking, why do I consider a certain time frame, what and what? So it is from the higher time frame. I'm from the higher time frame, so if I see lower time frame entries, then I can still use that bias as long as my order flow is correlating. You understand? Yeah, man. So I think we shall proceed from there next time.
Yeah, we shall talk about